What is the role of source documents? Why do we have them? So basically it's to be a source of financial information which provides evidence. So that's kind of the key word, evidence. And if we go back to our theory, we'll say really source documents help us fulfill a couple of qualitative characteristics of the rules of accounting. Two of those rules are faithful representation and verifiability. Let's start with the first one. What is this? Well, going back to the start of the course, we said faithful representation means that information must be a faithful representation of the real-world economic event it represents. Basically, it's saying all your information's got to be complete, free from material error, and neutral without bias. What's that got to do with source documents? Well, source documents are the evidence that users can check so that the information presented by, say, a business like Apple actually does represent reality. There will be a document for every single transaction, and that way we know our information is complete, without error, and neutral. Secondly, another qualitative characteristic was verifiability. This means that the accounting information presented must be verifiable or have evidence so that it actually presents what it actually represents or claims to represent. So very confusing there in the wording. Basically what it's saying is we have source documents, so we can always have evidence of every single transaction that happened. We can prevent the use of estimates and guesses. We said we can't do that with verifiability. We don't want estimates or guesses. And it also allows for information to be audited by independent parties. And together, these two things help people make decisions about a business. So if we can prove every transaction that happened for a business, every user in the system is better off. So let's just look at the accounting process, another topic from the beginning of the year. And we just say, look, you can break this down into other steps and stages and other textbooks do, but let's just keep it simple. And accounting is basically four things. Transactions happen. So right now in every Apple store around the world, people are buying iPhones and taking out, buying apps on the App Store. That's a transaction. And every time there's a transaction, there's got to be a source document to prove and verify it. Stage two is then at every business, including Apple, we've got to record all those transactions. That's going to be our next topic. We'll start recording them all. We've got to sort, classify, and summarize these source documents, turn it into something more useful and relevant. What is that? That's called a financial report, which is stage three. The transactions that have been recorded must be turned into information the user can understand. So if we look at Apple, I don't get a list of every single iPhone they've sold in the whole year. That's not possible. I don't even want that. I just want a summary of it in the three reports: income statement, cash flow statement, and balance sheet. And lastly, we've got stage four, analysis and decisions. The user can now analyze these three reports and use them to make informed decisions. So for example, if I was going to buy Apple, thinking about buying Apple shares, I can now go and look at these three reports: income statement, cash flow statement, balance sheet, and I've got confidence that they actually reflect reality. Why? Because there's going to be a source document to back all of them up. And that's kind of the chain of events. You can't make decisions at the end if you can't have reports that are reliable. You can't have reports that are reliable unless we've got a source document for every single transaction.